Okay, guys, good morning to all of you. Can you hear me loud and clear? If yes, give me a thumbs up or put an L and C, please. All right, morning to you, Alex, Angie, Karine. Hey, brother Yautung, you're around? Okay, guys, good morning to you once again. All right, let's just quickly like and share this to all your friends today. I'm going to add more ingredient for you. That's the reason why we started a bit of 15 minutes later, because I added some stuff, jia liao, all right, for today's MAO. All right, today got one special extra segment to share things with you. So please get your friends to come in. As long as they are invested in the market, in whichever they are in now, portfolio-wise, they may want to hear this from me, because I'm going to tell them the sell side and the buy side at the same time. So today's session will definitely be very jam-packed with great information. And of course, there's a good chance that you can use the information to make some money on Monday or Tuesday, all right, depending which market you are trading. But it's very important now, quickly like and share, get your friends in. They will definitely love today's sharing, okay? All right. Okay, so while waiting for you guys to do the necessary work itself, let's just progress to the screen. Okay, let's go. Okay, today is the 17th of June, Friday. Okay, now this is not only that today is Friday, thank God it's Friday, it's not only a weekend, but today for all the traders, do note today is the quadruple witching. It's very fast. It's just like we just had our quadruple witching in March, and now it's quadruple witching in June. And next one is September. Time goes very fast indeed. Okay, so today when I was sharing this title, I mean, a friend of mine called me up and said, Kel, why don't you make the title a little bit more scary, a little bit more, eye-catching? This statement itself is neither here or there. Originally, the original title of today is actually much more scary, is scarier than this particular one. But I was just thinking through, when a lot of people are already hit badly by the market, because a lot of people, they've been buying shares on the way down recently, despite our pretty pronto this warning. So I kind of figured that there's no need to add more panic to the whole thing itself. All right, so I decided to share something a bit lighter, but along the way, the direction of what I want to share today. Okay, so it's more like calm down people. Calming down people is actually pretty normal for the global central banks to panic. Now you may say, what global? Right. As you know, everybody is only focusing on the US central bank, but of course, every country got their own central bank. And of course, some central bank has not hiked their rates for a long time. So one of them itself, right, has hiked their rates after 10 years, first time in 10 years. So that's the reason why I use the word panic, okay? So a lot of information shared with you, but more important thing is, all right, the US stock market is definitely selling across the board, especially yesterday, whereby the selling was torrid, all right? For the moment the bell rang, all the way to closing, the market just keep on selling non-stop. So today, my sharing itself is going to be crossing between the selling and the buying. So do get your friends to come in, because they want to know which, why would the market might be rebounding, or it will rebound, right, in a near term, but just that you need to understand how it works, okay? All right, so let's just begin our morning MAO right now. Thank you once again. Okay, let's go. Now, disclaimer apply as usual, all my friends. Do note, my job is to do my best for you. Your job is to do your own risk assessment, okay? You really must do your own risk assessment. Please understand that. So this is very, very important information, okay? All right, meaning what? Make sure that your stop loss itself is placed properly so that you know what to do, all right? Okay. So let's start with the joke of the day first, as usual. All right, joke of the day for today is Jerome Powell sent us here. Okay, so apparently there's two sides of this cartoon. Okay, one thing is that, okay, this is the bear. Okay, we all know that the bear is coming into town. All right, Papa Bear has definitely hit the Nasdaq about 2 months ago. Then after that, S&P 500 fallen, and Dow Jones is just marginally around 1% away from the bear territory. Now, write it down somewhere again. The Dow Jones now is actually probably around, we're 29,563 is the Dow Jones bear territory. And the current Dow Jones now is about 30,000, around there, okay? So we are just about 500 points away from a bear territory down. Okay, so of course this bear territory, how to utilize it is just taking the highest point, the all-time high, multiply by 0.8, you get your 20% down from the high, and that is a figure. Now, for the TWB students, we are still aiming for this particular level, but we realized that the last 2 days, which is yesterday and today, the market just seemingly trying its best to defend the 30,000 mark. Now, of course, the 30,000 mark is a very important psychological level. Every 1,000 level is a very important psychological level. So undeniable, there are a lot of funds trying to hold the fort, because if the market really goes below 30,000, then they are just only like 1% away from the bear territory. So because of that, right, I expect the funds to fight ferociously at the 30,000 mark. So only when the 30,000 mark really, loses it, right, then if the selling really become too heavy, then yes, the market will come towards this 29,563. Okay, the second one that's here is if you notice, this is a dummy. All right, a dummy that you use for car testing, car crash testing, right? So what I'm trying to say is this: Jerome Powell sending a dummy and a bear together. Okay, all right, and of course for retailer, they're like question mark, what should we do? What can we do? All right. So the question is this. Now let me ask now, there's 91 of you got 9. Well, that's quite a lot for such an early morning. Now, what do you think? Do you think that tonight, okay, Friday, the Dow Jones will hit 29,563? Or do you think that it'll be Monday? Or do you think it's Tuesday? Now, do note, on Monday is a holiday, okay? Monday is a holiday, but the CFD market is still open, so liquidity will be very, very tight. Yeah, it will be very flat. Okay, so it's quite easy to manipulate. Yeah, what do you think, guys? Do you think it's going to be market will hit 29,563 tonight, Friday night, or Monday or Tuesday? Please key your answer right now. Let's just have a consensus here. Okay, so let's take a look. Okay, so Judy, as always, tonight. Okay, 29 tonight. Okay, Angie say tonight. Jerry say Monday. Corinne Monday. Angie tonight. Joe Fu say next week. Elise say tonight. Michael say hopefully tonight. Alex also tonight. Anthony Amir say tonight. Louis say Monday. Lion says likely be Monday. Next week say Jason, and Lian say Tuesday. The only one say Tuesday. Okay. All right. Now, yeah, I will tell you this is a bit tough call today, but undeniable in my own personal Facebook, I also put it tonight. Okay, I don't deny this. I also put it tonight. Let me just see whether I can drag this out for you a moment. Yeah. Okay, let's give me a moment. Let me just drag out my own personal Facebook to show it to you. Let's give me a moment. Now I put it tonight because I believe that we might be able to see this happening because we have the this quadruple witching today. But of course, at the moment now, the market seemingly is rather strong right now. So not too sure would it be tonight. But I still going to, whatever I say, I just have to follow through. Yeah, just a moment. Just bring what I wrote. Okay. Where did I put it? Moment, yeah. I think I lost track where I placed it. Okay. Wait a minute. I think I left it. Where did I leave it? Hold on, give me a moment. So I write until I forgot what I wrote already. Okay, here we go. Okay, so first of all, on our Trade with the Boys Facebook page, you can take a look here. Okay, so you can see that on our Facebook page itself, right? This is what I wrote back on the 2nd of June. 2nd of June, I wrote down there, right? The Dow Jones now is back then was trading at about 33,000. Then I said that we may see a 3,000 point move in June. All right. So of course, people ask me up or down. So obviously, with all these pictures, and I tell you, right, from June itself, there will be the quantitative tightening. There's no way you'll be up, right? So that's why it's more towards downside. Okay. All right. So I believe that it will be going downwards, as you can see on the screen right now. And of course, we're having live segment sharing. And I also wrote there as of 17th of June this morning, I wrote there, many central banks have hiked interest rate and that rocked the global stock market. We should see 29,563 if the selling persists. All right, so that was what I wrote this morning. And of course, I think I did write one statement somewhere around here. Just give me a moment, I cannot find what is it. Okay, so on yesterday, I write further about the chance of a quantitative tightening coming in, and again, I wrote that 29,563, and of course, I don't remember where I put the rest already. Okay, never mind. I think I don't know where I left the message. Okay, I just forgot where I left it, but doesn't matter. Okay, more important thing is this is where it is itself. Okay. All right, this is going to be very dangerous for a lot of traders because at the moment now the market seemingly is kind of supported right now, right? Yeah. Okay. All right. So, shall we say Wednesday? Okay. Anyway, let's continue. Yeah. Okay. Hey, sorry. Wait, my PowerPoint slides on. Okay. So you must understand why we have joke of the day continue because you must understand something has dramatically changed over the last few days. Okay, what has changed dramatically? Okay, let's take a look. Now, first of all, right, on the 15th of December last year, okay, that is like 6 months ago, the US Federal Reserve has their dot plot. Dot plot means that how much, where do they think will happen in terms of interest rate over a period of time. So you can see that back in December, most of them were looking at the interest rate to be about, for 2022 itself, the highest it will go is 1.25. That is what it is trying to say. Majority of them is looking at 1% to 0.5%. So in short, they are looking at the interest rate to stay low back in December last year. But you can see that, right? I don't buy that. I totally don't buy that. I believe that they had a high interest rate very soon because the curve inflation. And I was telling you, right, about the chicken rice could cost $5 and stuff like that. Sorry, wonton mee and stuff like that. So now, after 6 months later, as you can see from the new dot plot, my goodness, now majority of them are looking at about 3.5%. 3.5, and we are noting that 1% right now. 1% right now. So that means that right now it's 1.75, yeah. Okay. So which means that now we are still about 2% away by the end of the year. So let's say they will do a 50 basis point every meeting itself, right? Then maybe we can reach this 3.5. And the thing is that they only expect a little bit more next year to about 4 to 4.5, but majority of them will get 3.5 this year. So it's a very huge jump as compared to the last time, whereby they were all looking at only 1% to 1.5%. So this is really a very big jump. Because this is all projection, yeah. All the federal chief, all the Fed officials, they have to do the projection. So this is not like 1%, not 2%, but it's all of them. And a lot of them were looking at 1.25. But now they have changed their angle to 3.5. It's a very big jump here itself. So of course, if Federal Reserve can do that, then obviously it's all right. This will definitely rock the stock market, and you can see the immediate impact is there. Okay, the stock market is really indeed rocked by this. Yeah, just give a moment. All right. So continue. Yeah, continue. Yes. Okay. Now take a look here, everybody. Oops, sorry. Okay, but then is this the end? Now we have seen the stock market coming down already, but you see cryptocurrency also coming down. So by right, the next target itself will be the real estates. Now, why do we say that itself, right? Because we all know that it goes like that. If interest rates have to go up, right, the sector that will be very badly hit will usually be the real estate, right? They will be the one because of the interest rates going up. And of course, it's just showing the Reaper going through and going for the kill. And the best part is that this guy is actually a very famous Twitter user. And Elon Musk, yes, the real Elon Musk actually go in and say the word true. And of course, that created even more people watching this. So what do you think? Do you think it's possible that this next one will be real estate? So that means that a lot of people who have been buying real estate last few years, they bought it at a pretty high price already. And now the interest is going to go up soon. But of course, you may say, well, MAS side haven't increased yet, right? Well, I believe it's just a matter of time, really. Because normally when US increase interest rate, our local bank will also increase at the same time. This is always like that. So at the moment now, I haven't seen yet, but I think it's just going to be soon. Now, the crazy part is this, the home price to medium household income ratio has went ballistic. Look at it. Look at the number now. This number is even higher than 1996, higher than year 2000, the housing bubble. Now we are at a new record level. The home price now divided by the median income ratio is even higher. That means that the cost of living, the cost of the expenditure itself, right, is really at an all-time high level. All right. So if this is an all-time high and if interest rate going to come in heavy, like 2-3%, definitely going to pay through your nose. So this is very interesting. Year 2022, the start of the year itself, right, you can see that, wow, everybody is so bullish. You have this Goldman Sachs at 5,100, JP Morgan 5,001, Citibank 4,009, Barclay 4,008. Even at the time, the very, very bearish one was Morgan Stanley, at least 4,004. But today itself, right, we are 3,680, and this is the level I mentioned to you that likely the market will bottom out a little bit, right? Remember that? So you can think about this right now, right? All these analysts, expert, licensed fund manager itself, all got it wrong, at least for now. So that means I beat them all. Okay. All right. My point is this, of course, start of the year, I've been very bearish. I've been informing you guys, and I said that likely there will be selling the first 6 months. And I told you that. That's why I have this 1515 project. Right, but after that itself, I did say there will be 1 month of transition, and then the next 5 months, there will be a high chance the market may rebound. And let's see whether would I be right, okay? So the thing is this, remember I told you about this JP Morgan strategies, right, called Marco. Now this guy is right, whenever he called for buy, almost instantly the market will come down. So recently, again, on the 9th of June, he came in and said, you know what, market will rebound, it will go up. Definitely it will go up in a way. And of course, I just jokingly say that, okay, guys, short the market, because this guy has been so accurate. Practically every time when he called for buy, right, the market will come off. So now the Wall Street joke is that, right, this crash will not stop until Marco turns bearish. That means that if this guy called Marco ever say, okay, guys, the market is bearish right now, or it's time to sell, right, then maybe it's time to buy the market. So watch out for his call, okay? All right, so this is another joke for today. Now, put joke away, but something very serious. Now, this is the stock market that went all the way up till the point of November 25th, 2021, last year. Now, $900 billion came into the system and bought into financial, consumer, and energy. Now, other than energy making money, the remaining is financial and consumer are, wow, badly hit. So the question is, where is this money going to be? I mean, what do you do with this money? Are they going to keep it for long term, or there'll be some repatriation soon? All right. So I suspect that once margin call comes in, there will be a chance of repatriation. All right. I believe in that as well. And all these people who put in the money now are definitely losing money. So the thing is that now, right, on Google Analytics, right, you can see now more and more people are actually looking at the word recession. Okay. Now there's a good and bad part of this. The good part is, okay, the bad part is that means that people are getting worried. Okay, panic is there, people are getting worried, and they fear of capitulation. Now, the good part of it is that when it's at a high level, right, it's just about next 2-3 months, the market will be back to normal. So which means that the bull market might be just around the corner once we actually find a base. Okay, so we'll talk about this base later. Okay, very, very important. So now you can understand this. There was the market increased by 75 basis points. So the Fed fund rate target went up. That's true. And of course, what happened is that immediately you saw the Nasdaq, the S&P, the Dow Jones all went up, right? That also happened on Wednesday. So that time, many people were asking me, Cal, do you think the market is going to recover soon? And why is it going up? I told you guys it could be a bull trap, and I informed you to be very, very careful on this, remember? Okay, so what happened is that you can see the thing is that the buy-sell volume shows very clear that the buy volume and the sell volume was very, very tight. That means that, right, the buy-sell volume the last few days was very, very tight. So it doesn't show that the market on the Wednesday itself, right, was because the market finds a bottom. In fact, the buy-sell volume was so tight between both sides itself, right, it made the recovery a little bit fake. And of course, unfortunately, yesterday we saw that the market really, that rally on Wednesday was actually more like a fake move, like a bull trap instead. So now you can see yesterday we have DAX, FTSE, CAD, this all down by 2 to 3% across the board. DAX and FTSE down by 3%. Then of course we have Nikkei reversing 2% gain. Shanghai also reversed, and of course Hang Seng went up by 2%. But the US is the one that really rocks the market, down by 2.4% for the Dow Jones, S&P 500, Nasdaq all dropped by 2 to 4%. So all you can see is that the market itself telling you that last Wednesday may not be genuine, okay? So this is how the Dow happened yesterday, totally flat day, open already, start selling, no matter how you are doing, start selling, keep on repeating it, all right? So pretty bad. So this is the Bitcoin chart that I want to share this with you today. Now, Bitcoin has now went below the 21,000 level. As I told you, it's a very critical support there. Because when it was at 31,000, I told you it will go down to 21,000, right? Remember? So if you can do me a favor, if you remember that I was actually spot on for BTC, right? Can you put a bit BTC spot on for me? Okay, yep. So I was pretty spot on, right? Now you can see that the volume traded on the BTC itself is pretty heavy, right? Now it was also heavy back then, but the market didn't really move and it went sideways for a long while. Then after that, what happened? Now it crashed off. Okay. So every time when the heavy volume is out, right, if the market is full of funds, usually the market will rebound. But this time around, it doesn't seem to be happening because the market is coming down with volume. So this is whereby I suspect, right, there could be some problem for some company. Like example, the one I mentioned to you was MicroStrategy, all right? So I was very shocked when I saw MicroStrategy boss, Michael Saylor, come in and say that you don't mind buying more Bitcoin. So let me bring to you what he said. MicroStrategy CEO Saylor, says that, right, no margin call. Oh, okay, I thought his CFO said got margin call, but okay, never mind. So $1 billion was wiped out from his book. That's pretty bad. And he actually said this, he will consider buying more Bitcoin. Oh my God. I mean, seriously, as a trader, we all know there's one thing in trading is that you don't ever do buying when the market's coming down. Never go and catch a falling knife. So apparently, this when I saw this word that said he don't mind buying more, straight away my little brain here started to think through who said this before. And of course, straight away, this come to my mind. Remember this particular scene whereby on The Big Short, right, whereby there was this conversation, a talk show between one of the main cast talking to the guy from this Bear Stearns. Okay, remember back in 2008, okay, and he was just saying this. In fact, when we are done here itself, I probably go out to buy more. So what happened? Do you remember this scene? That after that, right, what happened to the counter? Do you remember? How many of you remember what happened after that? After he said this statement itself, right, what actually happened to the stock? Which happened to be the Bear Stearns stock back then. Anybody remember this scene? No one remember? By the way, I'm a very movie buff. I can remember most part of the movies as long as they are really interesting itself, right? Oh, okay. Yes, indeed. Karine, you got it correct. Yes, After that, itself, right, the bear stearns not just keep on plunging. In fact, it got so bad that the next speaker was Elon Greenspan, but people almost like 75% left the hall immediately because the stock was coming down at a very ridiculous pace. So, all right. So what I'm trying to say is this, okay? Now, when Wall Street it's a place that remember you very well. And when you say something like this, despite the share price coming down, right, when blood in the water sharks arrive, I kind of believe that it may actually drive down Bitcoin to 16,000. Not immediately, but it will happen. That means that they may purposely drive the Bitcoin down to 16,000 and pressure a lot of holders. And then after that, this guy will cut their losses. And then what happened? The counter may really go into what you call a panic capitulation. And after that, what happened? People will cut their losses and the smarter money will come in to buy the market. You got my point? It is very, very possible for this to actually happen. All right. So for me, it's all right. This weekend, I would like to say this, do yourself a favor. Try your best not to hold Bitcoin over the weekend. All right. I repeat, try, okay. I write down for you. Try not to hold BTC over this weekend. Potential black swan. I don't know why am I writing this for you, but I just want you to just have my feel on this, because we always know that usually when we see a sudden drop in Bitcoin, right, is on a Saturday or Sunday. And this coming Saturday, Sunday, after that Monday is a long holiday. So it's even longer than normal. So I just want you to be a little bit careful, because who knows? Who knows? The capitulation itself or the margin call may just kick in at the wrong time over the weekend. And then after that, what happened? It will freak the market out. Okay, it might freak the market out because we know that Tesla holding it. We know that this MicroStrategy holding it, quite a fair bit of it. So definitely every $1,000 downside, both companies losing between $1 billion to $500 million. Okay, so you don't want that to happen. Okay, all right. So this is why I'm going to share this with you. Okay. Now, 2 days ago, when I'm telling you the fear and greed index was at 17, and I show you that we are about near to a potential base here. Remember? Okay, I'm a guy who always update you, right? So now I'm updating you now. The index has came down to 13. Now, I told you, right, about 12 to 13, you can consider to look at the market, to consider buying back your short position if you want to, or you can prepare to lower down your short exposure. So this morning is all right. I already tell some of you guys to lower down your short exposure. You can still short to aim at 29,563, but in consideration of this, is all right. Try to lower down your short, okay? That means that take some profit off the table. Now, of course, if the market goes down further, you can actually get more money as bonus. But we have came from afar, from 33,000 all the way down now. We already make about 3,000 points. So it's good to consider to buy back some shorts, okay? You got my point? All right. Okay, so right for you, do consider to buy back some of your shorts, but don't go long yet. Okay, so if you understand what I just say, to consider buying back some of your shorts, but don't go long yet. All right, you can put understood at the back of my statement so that at least you guys understand what I just said. Because if you look at the screen right now, we have came to the point whereby the last time, every time when the market bottomed out a little bit, yes, indeed, this thing happened. Okay, so we are now back to that point itself. Okay, so of course, you may say, Kel, what if the market really behaved like what happened in the mid of this May, whereby it went down all the way to 6? Then, of course, there'll be more money to make. Yeah, I understand. There is a fair chance that the market may go to 6 on the fear and greed index. But my point is this, it doesn't need you to take the risk. So since you already shorted and make a lot of money, you can consider take some profit off the table. You can still aim the rest for that figure if it comes, but you don't need to all into that. Remember, trading is not about going all in to get the maximum profit. Okay, sometimes it's right, by going all in, you may get yourself into the wrong side of the track. And in TWB, we always focus on risk management. Okay, so it's very, very important here itself. Okay, got it? All right. So now remember, I showed you this on the 15th of June, right, 2 days ago. I told you, right, the market most likely, the bear will come on the stage first. meaning it will go on the stage, hit the 29,563. Then after that, it will go back out from the stage itself because the bull will chase it out. Then later, then it will come back in again for a longer time, maybe in July or August period. All right, so I'm going to stick to whatever I say now because I believe that this will likely be the same for the next few months, okay? All right, so that's the reason why I showed you yesterday that the market itself is still full of sellers. My KRW is still red, and I given you a figure. I said 30,600 is a very critical level. If the market cannot stay above 30,600, then the Dow will likely be coming down. So all this information was shared with you yesterday and the day before, right? So definitely, right, I can say very fairly my Dow was pretty spot on, right, in terms of my view. So of course, once again, if I can get you to write the word Dow spot on for me, that will give me a little bit of validation of my trading, what they call viewership of the market. Okay, all right. Okay, thank you, Karine. Thank you, Jerry, Angie, Jason, Sharif, and Anthony, Michael. All right, thank you guys once again. Really appreciate that. Now, it's really not easy to be handling this monitoring for you guys, and I really enjoy myself, even though it's very tiring. In fact, yesterday I monitored the market until 2 a.m. and I was very dead tired, so I took a rest. But about 4:30 a.m., I just jump up because I know that I have MAO to prepare for you guys, and I basically do all these things. Now, today's MAO itself is going to be very, very heavy content base, really heavy, no kidding. So you will definitely like it. If your friends are involved in the stock market, tell them to come online right now to listen because there will be a very powerful segment. I call it as special, right? Special alternate market data that you must really watch. Okay. All right. Don't miss it. Yeah. Okay. Oh. Okay. All right. So let's just look at today's calendar. Okay. So yesterday we already saw the building permits itself has came down already, not a very good sign. Then after that, the initial jobless claim really went up. I told you, right, it will go up, and it's really happened. And I told you most likely the manufacturing index is going to be down, and it really happened. Oh no! Now this is actually very bad. You talk about this itself. Building permits are down. That means that the property prices itself is not doing as well. The initial jobless claim itself went up, meaning more people are unemployed. That is very bad. And of course, the Philadelphia Federal, this manufacturing index is down. That means that productivity is down. So this is a classic recession, whereby unemployment increases, inflation increases, productivity goes down. So all these things together is all right. You ask any A-level student, the word that's used is not just inflation, it's actually called stagflation. And that is a very scary thing. So you can see now, right, tonight, Jerome Powell at 8:45 p.m. Jerome Powell at 8:45 p.m. will be talking again. And I believe that the market will be watching this very, very closely. And of course, likelihood he will stay more to the hawkish side, even though he's trying best to not to be that hawkish, but likely he'll maintain his position. And of course, on Saturday, it's still not confirmed yet whether they will release the monetary policy report, whereby they contain discussion of the current conduct of the monetary policy and economic development. So this one is also a triple star, what they call information, but the release is not confirmed yet. It's still under tentative. Okay. So that means that that's the reason why I feel that you shouldn't be holding Bitcoin or this cryptocurrency over the weekend, because any high gearing in underlying, right, it will be one of the target that the boys are going after, because these are the money that you can release out, and then it's not that crucial. But of course, if the market is having a very what they call liquidity issue right now because of what happened in Luna and stuff like that, and let's say Federal Reserve will continue to take away the money from the system itself, and there are also what they call policies that they may want to reduce, all these may actually pressure the cryptocurrency space. You got it, huh? Okay. So you can see from the Dow Jones yesterday was terrible. You see, Now, for market to come down after some profit taking, we can buy you. But after that, you see, throughout the entire day, there was no life at all. That means that the selling is so strong that the buying itself, right, has to be content with just normal buying, with just to contra each other. So you can see that that is how it is. Pretty sad, pretty sad. But that means that the market itself is just waiting for the next move already. All right, there's a high chance the market is waiting for the next move. So let's take a look what CNBC has to write. He says that the Dow Jones sinks 700 points, dropping below 30,000 for the first time since a year ago. All right, so we can see that it went below the 30,000 as we have investors getting back worried again on the aggressive approach towards the curbing inflation. So once again, on Thursday, it's all right. They tell you Wednesday, day one story say, yeah, because Federal Reserve have increased interest rate according to plan, the market likes it. Then after that, the next day, straight away, they turn around and say, oh, no. Actually, the increase rate so fast, not very good. Okay, so this is how Wall Street play this nonsense game. This is how they play. If you really follow through, it's all right, you're going to get hurt very badly. So always look at the news with a pinch of salt, follow a system that is workable, follow the color where it makes sense, and then do risk assessment. That will be the best way to do. Now we have the blue chips down by 4.7% and definitely is on pace to the 11 losing week of the last 12. This is really not good at all. It's a very bearish thing. So the last time we saw it was in 2021 in January, whereby the Dow Jones came down to 29,000. All right, the time was near the all-time high already, very near. Then after that, pandemic happens, of course, then but the Dow Jones continue to rally, right? Now we are back to where we started in a way. So that's the reason why traders are kind of worried that things may get out of hand. And of course, we do know that S&P 500 and the Nasdaq are already in a bad territory between 24 to 34% from its all-time high. Now the Dow Jones is only 19%. Now, of course, people say this, Kel, 19% is better than 24%, is better than 34%, right? So which means that, right, maybe the Dow will not hit 20%. Okay. I don't think so. Usually we are so near, it's all right. I believe that just a matter of days whereby we will trigger this 29,563, just a matter of days. But of course, all I can tell you is, I don't know where would that be. I put this today, but let's see how it goes. Dependent on tonight's quadruple witching, yeah? Okay, so the thing is that yesterday, the day before, the Federal Reserve delivered as people were expecting 75 basis points. They delivered, so there was no panic. And now, but people realize that this is actually not good for the economy, right? So that means that that's why they got a bit fearful and they're selling it itself. Of course, we also know that some of the investment bank, when they are pumping up the price yesterday, all right, when they did it the day before, all right, they did it because they also probably know that Thursday will be some selling. So all this information tells you that the Dow is very near or at the 30,000, and of course 10% from it itself will be 29,563, 5%, yeah. So they're saying that right now Federal Reserve is behind the 8 ball. They will be doing more heavy, accurate, more aggressive rate hike, and central banks around the whole world globally will likely be coming in, which I'll show you that later. And of course, whatever is happening now doesn't make sense because we are now in a point that the Federal Reserve will keep on increasing interest rate. So not too sure how long will it last, but it will be there for a while. Okay. Now, one thing is that the Swiss National Bank overnight raised rate for the first time in 15 years. Oh my God. Now, this is not usual SNB, right? They usually don't do that. And of course, Bank of England also raised the interest rate by 50 basis points for the fifth time itself. So all this information tells you that, right, you may be comfortable with 1-2% that you need to pay more, but you must look at it. If everything is up by 2% to 3%, then your cost of living will definitely increase, and that will not be nice. So because of that, it's all right. Today, I'll purposely want to share with you how to use my TWB chart to make some money from the market. Now, yesterday was a very clear sign. The KSI was red and it's uptick, so the market will likely be selling. So once the market goes below opening price, is below MA 200, MA 30, but above MA 3557. Okay, so what happened is when the Dow Jones went below the MLP 30,557, we took some profit. And of course, when it continued to go down further, it hit the level of 30,357. Straight away, the movement came in. Okay, the market recovered. All right, then it slammed down. Now, what was scary was that the KCB itself, where we have 29,765, it reached the low perfectly and then rebound. Really, if I was told, I would have bought back some shots. Okay, anyway, this is what happened yesterday. And you can see from the day itself, the very beautiful star was there. If you draw two lines, you will see a beautiful reversal right here itself, which came to CCYR. And then after that what happened, bang, the market go down, right? And of course, because it went below pivot 2, you don't need to wait for color change. You can sell again, and of course, add position at the square that I'm drawing for you right now. Okay, of course, it's not every trade will be perfect. Some trade will lose money, but it's fine. At least it's part of the job itself to understand. Okay, so it's very important to see the star and then trade accordingly. Okay, now look at the gold price right now. The gold price was quite crazy yesterday. Gold price was against traffic. First of all, Dow Jones was down, US market was down. Then after that, right, the thing is this, the funny part is that the sun is, what do you call it? The sun, right? Yeah. The thing itself, right, the market was looking at it, and the market, the dollar index and the 10-year yield actually went down, which is very, very unique. And of course, what happened to that? Immediately, the gold found strength. The gold found strength at MLP at 1820 and then rebounded strongly past the opening price, break MA30 and break pivot 1 together. So that shows a buying up, but there's something to concern for is the KSI is still red and no blue bars, right? So what happened is that likelihood that it will be chance that the gold price will be pulling back again. So you can see what happened last night. Same thing, the market was just sideways, then there was some selling, right? But once you see the bomb itself, you draw the two lines. And I told you, once you draw the two lines, if the market purposely come down back to here, you can consider to ask him to just get up. If the market breaks the RL of the bomb, then of course the market will shoot all the way up. So you can see now how critical and important to have the bomb on your hand in a way. Okay, got it? All right. Okay, so now look at some news today. Now, China middle class looks to flee as COVID-19 policy bites. Now, I was just sharing with you, I want to share with you now a little story here. Now, my friend has a girlfriend that's from China, okay? So she wants to come to Singapore to visit him, and she can't. Why? Because apparently itself, right? Apparently her passport is already expired. So, I mean, expired passport like Singapore, you just have to renew, right? But the problem is this. The problem is this. They don't allow them to renew. They don't. Yes, they don't allow them to renew. So what's the reason? Then, of course, right, the reason is this. Actually, China is actually trying their best not to allow their people to go out, apparently. So this is something crazy in a way because people want to get out. And of course, those some of the places that they got hit, like Shanghai, etc., have made some people very upset and distressed. So because of that itself, right, you can see that this guy, a Chinese freelancer, told AFP that he was turned down by the immigration officer while attempting to fly to Turkey for work last October, despite having checked in. So apparently, because he had checked in, but still they rejected him, right? They took the passport away and said that they don't need requirement and let him go. So he managed to leave the weeks later by entering semi-autonomous Macau. Yes, indeed. So a lot of people, right, they want to come to Singapore. They can't exit from China. What they do, they go to Macau or Hong Kong, and from there they come back to Singapore. Yeah, in fact, a friend of mine did this recently. So, and this how crazy is that? So now what's happening here is people are getting worried in China. That's the one little issue that we have here. But of course, the main thing is this, right? Singapore is ready for the next wave. Public hospitals prepare to set aside more beds for COVID-19 patients, no plans to freeze leave. So the thing is this, we all know that our Ong Yi Kang has already said that, right, we are gearing for the 5th wave of COVID-19 as early as July. Now, obviously now more and more people are taking off their masks and stuff. More places need you that be mask off. So definitely this is all the preparation work. So by July, August, right, the South Africa BA4 and BA5 virus variant is likely to be coming in, and that's why you need to be careful. All right, so because of this thing, maybe you should go my third jab, yeah? All right, now, one thing to note is, all right, the crude oil price is still gearing up, and Biden is definitely very upset already. So you can see that the prices going up, and of course, they keep on blaming it's because of the Russia thingy, but we all know that, right, it's not that because the oil price has already been going up. You can take a look at the chart here. The oil price has already been going up since for quite a while until the Russia thingy. Yes, it may bring the a bit higher, but it's not the main catalyst. So to me, it's all right. This is making Biden very upset, and I'll talk to you more about Biden later. So now the thing is this: all the drivers now is still holding back because still within acceptable range. But once, if let's say the crude oil, sorry, the gasoline price hit $6 per gallon, definitely is out, or the crude oil plus the crude oil break 140, then this will really send a lot of problem down. And of course, if the driver don't want to drive because they think it's too expensive, then of course supply chain issue will be disrupted again, and the whole inflation thing will just repeat again and again. You get my point? All right, so you can see now the UK drivers are paying record prices to fill up the tank. So from 2004 all the way to 2020, the last 18 years, we're now at a record high. So this is a global problem now, okay? Now, because of that, right, airline counters also went down yesterday because now, although usually spring and summer, the travel demand increases, prices also increase, but the problem is that now they are fearful that if the economy is not doing well, it's just a matter of time, things may change. So yesterday, American Airlines, Southwest Airlines, Delta, all come off. So you can see that, right? Jerome Powell said recently the planes are very full, plane tickets are very expensive. Yes, indeed, but still the bottom line is being hit because you can't charge too expensive for the ticket, right? So again, all these tell you that we might be facing recession very soon. And this is whereby, that's the reason why Federal Reserve increased the rate hike so high, that's the highest ever, because they know that the consumer price index is really at a high level since the last 40 years, okay? All right, so these are the global news. And now let's look at something more important to the financial market. Now, Elon Musk just told Twitter employee about his fear about what he thinks. And definitely people are very worried about being laid off, right? But of course, he came in and said that, right, as long as everybody do their work, he's fine. So it's a pretty good sign. And he did want Twitter to reach 1 billion daily active user. Now, obviously, so when Elon Musk buy this Twitter, it's made a lot of people upset because I think the policymaker, because they're scared that he will use it to do some, utilize it to influence some people. So that's the reason why, there's a lot of things ongoing now between Elon Musk buying Twitter. Now, cosmetic giant, right, Revlon, right, files for protection already. Oh my God, this is the company, right? You may remember this is we see this last time in the advertisement. So this company now, after so many years in the market, has finally, as one of the major consuming-facing business, has filed for bankruptcy protection. This is really scary because when this company is so big, they also had to file bankruptcy. Those smaller ones, what do you think will happen, right? So undeniable, right? S&P Global Market Intelligence tracked about 143 bankruptcy across industry since May. But this should be considered low because there will be more other time. But to me, this is just a beginning, okay? This is just a beginning. I suspect that there could be more coming in, especially from the retail side. So Jerome Powell said already, right, most likely there'll be a rate hike of 0.5 to 7.75 again in July. And this is not going to go well because people will know that, right, if you increase interest rate very soon in July and earnings coming out in July. So if the earnings is not going to be good and there'll be more interest rate hiking, right, it's very clear the fund managers won't be buying shares to buy now. Even though the stock price is cheap, they may not want to buy a lot right now. So the dot plot already tell you that it's happening, right, I showed earlier. So it doesn't make sense for investors to go in right now. And of course, people are more worried that whether Jerome Powell is actually on top of this because, right, definitely we might see recession next year. And of course, during the meeting, I was online live with my students, at 2 a.m. We went through this together and it was very clear. You can see that Jerome Powell was choked on his words several times. If you notice that, yes, he choked on his words several times. And when he was answering the question on journalists, it's not the usual Jerome Powell, a bit of like what you call 理直气壮, 理直气壮, all right? He was just basically reading off his script and his eye contact was not really there. So of course, this little thing, we all know that, right? He knows that he's trying to quickly get over it and quickly move on because he knows the next one will be just July and he had to go through this again. So to him, it's all right. He knows that. But the thing is this, we all know that when he was being asked this question about how good is the economy, he keep on reminding the journalists that it's well positioned for higher rates. But there's an Atlanta Federal gauge that showed that flat economic growth in the second quarter after failing 1.5% in the first. So that means that the reports are showing it. And that's how earlier I told you, right? We have all the data coming down, right? Unemployment increasing, the manufacturing index going down. All these tells. So somehow or rather, I think that yesterday, on Wednesday, the recovery was done by Federal Reserve plunge protection team. They know that their boss is going to say something not so nice, but rather than actually to let the market collapse, they keep on buying it. That's why you see the market reverse all the way up itself and close at the high in a way. But then after that, on Thursday, they just let go and boom, it came down, right? It's a very typical thing that usually the what you call the national team will do that, because they know that their boss knows that things will be bad. Rather than make it ugly on that day itself, they rather push it up. So that was how I see it on Thursday, and that's the reason why I call for sell. And I could immediately say that it could be a bull trap, and it has proven correct, okay, in this case. So now, some strategies actually says that this is going to be a shallow recession. I think the same thing as what this Jeremy von Wharton says. It's the same thing here, but it's a potential US recession that will spread across the world. And that one, I totally agree. All right, but of course, not everybody is convinced that the recession is imminent. I told you, I mean, as always, expect 100 people go for the same class. You have the top student and the last student. So to me, right, some people say that no, it's good, it's better. I don't buy it. Now, this guy, Kevin O'Leary, he's quite a celebrity investor. I don't think he'll be correct. I think he'll be absolutely wrong on this. Now, again, of course, he's better than me in certain level. So I will say that, right, again, be positive, but I don't think so. All right, now this is one lady that I actually studied her writing, and I think she's pretty good. I think some of you may know who is she. It's Kathy Lien. Now, Kathy Lien, this statement, I like it. He actually says this: Federal Reserve is telling us that it's willing to risk recession for inflation, and it's totally true. It's very clear there's no way they can get inflation out of the picture without risking recession. Because when you increase interest rate at a very phenomenal rate, it will definitely bring down the inflation later, but it will also spook in this recession, especially now when this happened, right? People start to reduce pull handbrake. So this is actually pretty bad. So he actually came out with 10 takeaway from the June meeting, which is fantastic. So we all know that it's going to be it's a 75 basis hike, the biggest move since 94. So it's not a very good thing at all, right? As you can see. And of course, the next meeting is a 50 to 75 basis points. So this is going to push the market down further. All right. And of course, the thing is this, the forecast has went up definitely. All right. And growth is expected to be lowered. That is not a nice thing to happen. And unemployment is supposed to go up. So again, it's not good. And only rate cut only in 2024, not 2023. So that means we're talking about a potential of 1 year plus of high interest rate. And they don't know how restrictive the policy will be. And this is crazy. They expect a soft landing. Okay, I don't think so. It should be a bumpy landing instead. So with all this information itself, the economy is definitely shrinking, as you can see. And BOE itself is also hiking interest rate. But the only problem is BOE, Bank of England, right? They don't have the muscle because they don't have the economy. The economy is shrinking. So again, this is bad. This is really, really bad. Okay, this is from Kathy Lien, all right? All right, so now the thing is this, will we have this bull coming, a bear coming in, right? We have two segments for today, special for you. The alternate market news and data and the special one, special ingredient. No, stand by for this, yeah? Okay. So of course, just earlier I showed you about this picture, right, regarding the Ripple going down to the real estate. Okay. All right, so you can see what's the reason. Now, apparently now all the central banks, not all, I mean, majority of central banks now are all hiking interest rate. Argentina central bank hiked to 52%. Okay, it's the 6th time this year have hit the rate hike, and now it's at 29.3. Oh my goodness. Now, ECB hike rate for the first time in 11 years. Oh my God, first time in 11 years. And the one that was stunned the market itself was also this Swiss National Bank, SNB. They also hike rate by 0.5%. So all these are things that people don't expect, and they all happen. And that means that the central banks are getting very worried. Now, look at it globally. You can see now, right? Wow, everywhere from Korea to Brazil, Canada, to Czechoslovakia, Hungary, in Australia, Mexico, New Zealand, Saudi, South Africa. My God, everybody is actually around those things I just said have increased their interest rate between 50 basis points to 75 basis points. So you can see it's scary because now globally, everybody is doing that at the same time. So when everybody is doing it at the same time itself, right, you should know that the whole market now is going into potential global recession, okay, potential. So the scary part at the same time is this. We are now having an interest rate hike at the same time while quantitative tightening is actually happening. So do note, right, the balance sheet will be reduced this year by 380 billion and 860 billion in 2023. And of course, that eventually monthly of 73 billion, and they want to take out 2.8 trillion out in 3 years' time. I'll be absolutely honest with you, I don't think this will ever happen. We may have about 380 billion taken away for the first 2022, but I don't believe that we can go further after that, because by the time that happens, the stock market could be in a very, very crazy level that I don't think the Federal Reserve can continue to do that without breaking the Wall Street. So I don't think so, but definitely this time interest rate increment plus quantitative tightening at the same time is a double whammy, and we don't want this to happen, but it's happening right now. So because of that, right, the home builders traffic is really going down right now. The present sales and future sales are all going down. So of course, the good part is that maybe that is making sense, the inflation is coming down. But you must understand at the same time, if this is happening, right, the economy is not going to sustain. So we have a problem. And now the mortgage-backed securities recently has come back again. So again, now these boys are going to play this MBS again so that they can be protected. So again, this whole thing has just started. Okay, this mortgage-backed security thingy. It's not a bad thing itself. It's just that people are buying it because they are taking advantage of the current situation. And of course, stagflation now is becoming the most popular economic backdrop expectation. So we are now back to the same level we had back in 08 itself, whereby everybody was believing that it's going to be a stagflation because of the economy. But you must understand, back then itself is still okay, but now it's different. And of course, right, in case you're asking what stagflation is, whereby economic growth is coming down while inflation and unemployment is going up. So in words form itself, right, basically it's just telling you that the economy is malfunctioning and food prices is going up itself, economic growth is coming down. All this itself, right, we're not able to stimulate the economy, okay? So that is what it means over here. So my point is simple. We are not going to change the fact that Federal Reserve will continue the rate hike. And of course, if Federal Reserve continue rate hike, then the rest of the central bank will continue at the same time, right? So if everybody also keep on doing the rate hike, if everybody, you hike, I hike, everybody hikes it. So what will happen next? Definitely for sure itself, what you will face would be the one that I fear most, a global recession. So that is why I feel that we should be very careful and take precautionary steps towards this, okay? So Biden is definitely very unhappy right now. And he actually sent a letter to 7 different petroleum companies and demanded them to really consider to lower their so-called expectation of prices, because this higher price, they do understand that higher price means higher earning for them. But if it's too high, it's all right. President Biden wants to exercise his president rights to, add pressure. But the thing is this, the laugh is this. The American Petroleum Institute, API, replied to Biden and say that, oh, sorry, Biden, we really can't do much for you. Now, the Biden letter went to Marathon Petroleum Corporation, Valero Energy, ExxonMobil, Phillips, Chevron, BP, and Shell. And of course, they all, in short, and the Chinese word, London Yao, meaning, right, they really don't bother, okay? Seriously, I mean, this is all billions of dollars of profits. Who really bother? And what can they do? Seriously, take out this company away. Imagine if you do that itself, right? What will happen to crude oil prices? It will go through the roof. So it's a bit of like, it doesn't make sense, yeah? Now, this is something that we must understand. So to me, crude oil prices will continue to go higher. Now, let me explain to you now with some charts here. In a moment, yeah? Okay, you see the crude oil chart right now, everybody? Now, look at the crude oil chart. Now, yesterday, I believe that after Biden, the thing came in, the crude oil price came off a bit. It went down to a low of 112.50 level, okay? But then after that, very fast, it rebounded back to 116, very fast. Now, the support level for crude oil is at 114.70. That is the level to watch out for. If crude oil stays above 114.70, it will still continue to go higher. And this time around, 121. Now, this is a lower trend momentum downside on the uptrend movement. So it's a very easy thing for the crude oil to go up to 121. So traders, this is something that you have to take note of, okay, on this point here. All right, so tonight we will have the quadruple witching, right? The quadruple witching, yeah? So let me explain more in detail to you, quadruple witching. Quadruple witching are the 3rd Fridays of the March, June, September, and December month. That way, they occur near the end of each quarter in the year. And for this year itself, we have 18 March, 17 June, 16 September, and 16 December. Okay, so just to share with you, is the expiration of the stock options, stock index options, stock index future, and single stock future. Okay, so these 4 things expire. So what will happen normally? Okay, let me explain this to you with a chart. It will be easier to understand. Okay, so look at the chart right now. So before we go to S&P 500. Okay, okay. So remember, that's now I showed it to you, right? The last time when this happened was 18th of June, right? 18th of June was what it happened. So let's look at 18th of June, everybody. On 18th of June itself, right, you can expect 18th of March, sorry, 18th of March, my bad. 18th of March was here. You can see the volume was there. So you see, usually the heavy volume is potentially the quadruple witching. So what you saw here itself, the market actually went up. The market was in a uptrend momentum, right? And the market moved up higher. You can see that, crossed the moving average, and of course it went higher. So this is what happened on the 18th of March. Okay, so it's pretty good, right? For those who have been on both sides. Okay, then after that we have the earlier dates like 19th of March, 16th or 18th of June, and so forth. Let's do slowly one by one. 19th of March 2021. Yeah. Okay. Okay, so 19th of March 2021, it should be here. Can you see that? The market was a doji. Then the next day, it was an up day. So seemingly good, right? By the time itself, when that happened, the market was trading above the moving average here. It's trading above the MA. So that's the reason why. But after that, the next few days, the market came down. So interesting, yeah? Okay, next one is 18th of June 2021, 18th of June. So quite easy to find out, just find the big candle. So 18th of June, it wasn't very nice. The market was a doji before that, and the market opened lower and traded below the moving average and sell near the closing price. So not very good. But after that, the next day, the market do a very strong buy up. So again, it all depends on your strength and your connection and stuff like that. So it was all the way up after that, yeah. Okay, so next this is what happened. Then we look at the next date itself. We're talking about September 17 and December 17. Okay, both are 17. Okay, so we go to have that. Okay, this one is September 17, yeah, September. Okay, September 17. Now this is where it gets scary. The market actually opens lower, and you notice a doji, right? Before that, a doji before that, and then after that, market closed low. And the scary part, on the next day, it actually gapped down, and the market sell down very heavy. Then the next day goes up. Interesting, yeah. Interesting, phenomenal, yeah. You got an idea now? I think you probably get an idea already, right? The last one is 17 December. Hi, Kai, all the way on Germany. 17 December. So you can guess this should be the one. Oh, no, it's not heavy volume. Okay. So again, on 17 December, okay, the market opened lower, trade down, break below the moving average, but when it close above, but next day, gap down further. Then it goes up. Do you see that point now? The repeated thingy? Okay. So now you look at the current situation now, where we're going to have our quadruple witching, right? Okay. So everybody focus what I need to say in a moment time. Now we do not have a doji. We do not have a doji. So likelihood the price will based on it. So most likely the market tonight may see a gap down as what the past experience is. And then after that, trade down a little bit. Okay, then they may stop there. But after that itself, right, the next few days, the market may actually stage a very strong rebound. So all I can tell you this is like today or Monday, all right, do expect a little bit more selling. Then after that, right, the market will likely base out for a short moment and then recover. But like I say, we are very, very far away from the current moving average itself. So you have to, you won't have this. I just have to know that this may happen tomorrow. Then little information for your friend, okay? Can buy Occidental or not? Okay, now let's look at Occidental for a quick one, yeah? Okay, of course, I know some of you will be on it as well. Which I tell you guys, go slow, don't need to bother, don't panic, let it come down first. Okay, so Occidental Petroleum Gas, okay, has came down, all right, very nicely. The low itself here was this already done deal. So the next one will be here at best. Okay, let me just say numbers here. Okay, so it's confirmed that it should be good. Now, this OXY, right? If you can buy about 454 to 55, this price will be the best. Okay, $54 to $55 for Occidental Petroleum. Now it's 56, right? Let it come down to 55 or 54, and then you can buy on it. Okay. All right, I'm confident still. Once it comes down to this point, example, it will be down, 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 and then a bit of recovery. So that's how I see it for this counter at the moment. Yeah, unless something dramatically happened to the crude oil prices, and then after people don't want it, then we will probably get. Okay, got it. All right. Okay, so that is a quadruple reaching to take note of that. Yeah. Okay. All right. So tonight, okay, usually it's the last 1 hour of the day, trading day. So from 3 a.m. it will start. So take note of that. Sometimes it may move a bit earlier at 12 noon or 12 midnight, but again, just go slow on today. I already reminded you, for those who just joined us today, I reminded you, consider to take some profit off the table. Yeah, I already told you that. Okay. All right, let's continue. All right, now I'm going to go to something more than that itself. This is going to be the super alternate market data. Now, this is something beyond what you just saw. If you like what you see earlier itself, right, this is something even more. But of course, some people may not like it, because some people think that this type of data itself is not found in mainstream media. They cannot follow through it. They found that it's a little bit unorthodox. Now, do understand, whatever you can find in mainstream media is already been, what they call watered down, or they may really try to make it a little bit easier for you to accept it. So, but certain data that's going around the boys itself, right, which is more important, are the things that you really want to know, so that you will know that certain things itself in life you cannot take them for granted. So let me just check with you now. There's 121 of you right now online. Okay, that's a good number. How many of you would like me to do this segment itself? That means you really don't mind listening to things that's not found in mainstream media. If you want it itself, right, hit the word I want. Okay, that means that I want to see that you guys really want to watch this segment here. So it's about 5 minutes, okay, to share you about 5 different charts. But these 5 different charts itself, right, it may not be, it's a little bit like it's not found in mainstream media. So some of you like may find it, okay, you may not like it in short, yeah. So I'll share this with you, okay. So let me see how many of you want it, then I will continue, yeah. Oh, wow, that's quite a few of you want it. Okay, wow, that's a lot, huh? So from Brian to Lionel to Jerry, Sharif to Kelly, Hua, Liu, Yang, Michael, Chu Kiet, Peng Meng, Janet, Diana, Jofu, there's Leslie, Angie, Nancy, Jet, Elza, Kai, Anthony, Alex, Susan Tan, Jason Tan. Wow, okay. Wow, so many of you likes this one. Okay, you all didn't know what I'm gonna share. You all like it already. Okay, David, Dennis, Ivy, Andrew. Wow, so many of you. Okay, thank you guys. All right, so I'm gonna do this itself, right? So some of you may not really like it. So later after I share finish, let me know what's your view on this. Okay, let's go. Ready? Okay, let's go. Now, this is what happened, okay? Take a look, guys. This is what happened last night. The New York Stock Exchange uptick minus downtick. Yesterday, last night itself, right? Okay. Okay, last night itself, right? The selling was so torrid that it was actually a very huge selling off in the market. It's a program selling yesterday. So it's so programmed that, right, that yesterday was a stunning, the rating was minus 2057. That means a very, very low figure. There are only 3 sell programs in the entire market history that has something of this size. Oh my God, okay? Okay, so it's not a common thing at all. So yesterday's selling was really not common at all. Now must pay attention to detail, yeah? All right. Hey, wait a minute. More on, okay, I think there's a jump here. So let me just correct myself a little bit. Okay, so why was the thing so badly? Is that right? Was yesterday the adjusted misery index? Meaning they actually weigh in. You don't only see in mainstream media, right? They really do an index on it, and they realize that the current situation now in the market is really terrible, really very bad. So the last time when this happened was during the Jimmy Carter time back in 1975 to 1979. I'm not even born yet by then. Okay, so who is Jimmy Carter, right? You may want to know who is he. All right. The thing is this is actually from Bloomberg directly. The American inflation and the labor market situation has driven the misery index adjusted using the CPI and the LFPR to its worst level since Jimmy Carter was president. So this is how Jimmy Carter looks like. And of course, this is how Biden is. Okay. All right. I purposely choose a picture to degrade him a little bit here there. But you can see now, right? Oh my God. All right. So you understand now the current misery is actually at a very high level of many, many Americans. All right. They are really unhappy. They're really unhappy. So now we have a problem, guys. Earlier you saw, right? I said to you earlier that the program selling has never been so bad before. So take note of this. Right, there were 3 instances recently when the number went to near 2,000 plus point. And actually what happened is every time the stock market will recover. I repeat, the stock market will recover. All right, because the federal balance sheet is actually together. So the federal balance sheet, right, has been moving up. And that's why even though that program selling is so fierce, and every time after the program selling, the next day or next few days, the market will always rebound. But because at the same time, the Federal Reserve balance sheet was still around. Okay, so this is something to take note of. All right, the market will rebound usually after the heavy program selling. But the problem is, this time round, the balance sheet is not really following through. This time round, the balance sheet is actually coming downwards. So which means that yesterday the program selling was torrid, it was worse, it's bad, and usually the market will rebound. By the time itself, the Federal Reserve balance sheet is always with them, but this time now it's actually reducing. So this is the problem here, guys. This time now the balance sheet is actually shrinking. It's actually shrinking. So because of that, right now, right, we have going to have 2 takes here. All right, I think just now you already heard me very, very upfront. I tell you, right, most likely there will be some recovery on the US market because of yesterday's program selling. So of course, in your mind, it's like, this program selling, would it be continuous selling? Now, because program selling is done by, you can see the mechanism where it just keep on selling, right? That's why you see the Dow Jones was flat all the way down. All right. So of course, when it's over, usually people say it's cheap, let's buy. Okay, but then again, that happened itself when the balance sheet was with the market. But this time around, the balance sheet is not with the market. So there will be 2 sides here. I strongly believe that the market may try to do an incidental bounce upwards. But after a while later, if the market breaks below OP again, right, the selling will be even harder. Got my point? The selling will be even harder because this time around, we don't have the balance sheet together. And of course, now at the moment now, the capitulation watch, right? This is actually done by the Bank of America Global Fund Manager. All right, it shows that now today the numbers are actually pretty bad numbers. All right, but it's not the end yet. So simply put, right, the fund managers indicator mostly are at capitulation level now. The one exception is the short-term interest rate, which is still okay. normally a big low, universally expect central bank to panic and cut rates, right? 2022 now, but we are at a different position now. It's totally opposite. Usually when these indicators at the lower side itself, central bank will cut rates, right? But this time now they are increasing rates. It's a very different thing altogether. And this will actually pressure the potential of a capitulation, because that means that, right, the market is like, I need water and you give me more fire, that feeling, you understand? So what is happening now is this, there is some more problem coming in, and this may continue, and this is going to be bad. So now apparently the equity flows are still not at the point of capitulation yet, but we are getting nearer and nearer there. So this particular thing is telling you that if you think that we are now at the very bad level, right, think again, because we haven't started yet. That is what I'm trying to say. So the market is trying to tell you that now, right, the market hasn't really come to the point of, oh my God, yet, no. We will see a rebound. I told you, right, we will see a rebound soon. Within these few days, the market will rebound soon. All right. Then after that, it's all right. Once the market rebound, okay, this will be the last leg. And then after that, it's all right. It may go sideways for a moment, and then the real selling will come in. The real selling. Yes, the real selling. Yes, we are not out of the woods yet at all. In fact, it's all right. We just started. So that's the reason why I say that this segment here is all right, may not gel well with some of you guys. Because a lot of people now is asking me, Kel, the market should be rebounding soon, right? The market should be rebounding soon, right? And I keep on reminding you, yes, it will rebound soon. Yes, not undeniable. But we are not out of the woods yet, okay? So that is the point here. And these are all the data that you cannot lie, because it's all come from the off the mainstream media, but it's internally circulated. And of course, I'm doing all the homework for you, all the heavy lifting to let you understand this in a very easier way. Because most of these articles are quite long, I only extract the most important part to share with you. And of course, I break it down to a simple way to understand this. All right. So that's the reason why I want to share this with you. So guys, if you think that what I just shared itself, the last 5 minutes, if you like that, give me a 5 out of 5. If you think that this is crap, just give me a 1 out of 5. Okay. Give me a rating right now. I'll get some water for myself. Okay. Before we go to the charts. Okay. Thank you. Wow, so many 5s. Wow, you guys are very, very generous. You guys are very, very generous. Kai, will the Dow eventually go to 26,000? This one I will leave it for alone first. I will talk about this maybe maybe a bit later, not now. I cannot really think of a number. I can lie to you a number right now, but I got my mind now is pretty empty. I cannot see the next number coming in. Let's just be happy with the first target, 29,563 first. Then after that, maybe we can see a better number. Yeah, you know me lah. I don't prepare my charts beforehand, so I let my brain move on. Yeah, Sean Michael. So yeah, indeed, we may see the Dow have to, maybe the Dow may go to 29,563 maybe first, then likely then the rebound comes in. I felt that way because that's a bad territorial mark, okay? Wilson, would that be a case whereby we doubled our short position? Maybe if the market really hit 29,563, we get back the money already, then we can actually redo this again and watch again and see how it goes. Yeah, I got no idea how would it be, because like I say, the statistics over the capitalization work itself doesn't make sense here. So something is very wrong in the whole equation. And you can see that the current situation now, whether it's the unemployment data and other things, is very clear that the economy itself is bad. And now we have central banks around the whole world increasing interest rate at the same time. And this is not good, because if everybody increase at the same time itself, right, it will add a lot of pressure to a lot of people at the same time. And the supply chain issue itself is one thing, and if the BA variant continue to come in the world, then of course there's a chance that China will not walk out of this because China insists to have the COVID-0 policy. So China is a problem already. Russia is still ongoing right now. And you can see that Biden got no power to overwhelm the current crude oil situation. He has tried to put in more barrel of oil into the market, but the market is absorbing it like a sponge, as if that is like free money. So to me, it's all right. The more Biden released to the world, the more the other entities are sucking it straight away from him. So it's like killing him literally, you know my point? So as long as we don't see any really spectacular way to reduce the current inflation problem, which is crude oil, I can tell you this, it's all right. It's just a very slow but confirmed pathway towards a global recession. And of course, if that happens, it's all right, then the selling will definitely have to be equivalent. Yes. So the cross means the condition not met yet. Correct. That means it's not there yet. Yeah. So that's the reason why it's still, we are not even near there at all. We're just about to start only. Okay. All right. This is really from at the highest level from the fund manager survey. So this is something that you don't get from mainstream media. Okay. All right. So hopefully, yes, I can talk about this later on. Okay. All right. Let's continue with the charts right now. The bull goes moo, the bear goes grr, and the flamingo is different this time. Let's go. Whew. Not easy to be talking so long. Really, no kidding you. Okay, let's go. China. Wow. Okay, China again today recovered strongly. Yesterday was down. Today is up. But again, it's actually now kind of resisted at the moving average MA 200. So if the MA 200 breaks, we may see that will pressure higher to go higher, and that will be good. But if the market later on pulls below this line, then the selling will resume. Now, we do know that China is trying to recover ASAP from the current situation. They try to release people back to work and stuff like that. But if they want to stand by with their zero COVID policy, it's going to be tough. Really very tough for them. Okay, it's like, you know, trying to be like, not to be sick while you're in a room of people that are sick. It's kind of tough though. Okay. Now let's look at the US market today. Now US market this morning has already, you can see the bomb is here. If you put the two lines, you can see a very clear, it breaks the support here itself and recover. So that's the reason why it's gearing higher. Okay. So for today, the US Dow Jones, okay, the signal is pretty clear that the KSI is red in color, okay, but it's downtick, so that we're still selling pressure, but not as strong as the day before. All right, so as long as market stays above OP, it's still okay. Today's OP is at 30,031. So now it's above OP, right? So as long as it stays above OP, you don't need to worry nor panic. But because it's KSI red, so what we can do is that we can, if you want to sell short the market, right? What you can consider is let it go up first a bit, yeah? So first step is to go to KTR plus 1, which already happened. And once it went there, right, see immediately the market pull back. You can see that. Now it crossed KTR plus 1. So the next direction could be KTR plus 2, and that's 30,256. So this will be a better level to short the market if we actually do a CCYR here itself. Only when you do a CCYR here, then it's okay. Now, but you can see at the bottom screen, the whole day, the KSI is green in color. So that means that the boys are actually buying as it is. So if the boys are buying, it's going to be much tougher for the market to, come down for today. So you need to wait for the sign to come in first. Do not jump in blindly just because we are looking at 29,563. If the market need to wait for one more day or 2 more days, then to reach out there, it doesn't matter to us. But if you want to take some profit off the table first, then if you consider doing that, at least that will release some stress on your account and yourself. Okay, you got my point? Yeah. Okay, let's look at NASDAQ. Now the NASDAQ also show a very interesting thingy. NASDAQ, the KSI have been green the last 3 days. Then it works on the day before, but the selling came in heavy. That was the program selling. Today, if the market stays above 11,700, 11,178, right? That's opening price. It'll be up because yesterday it hit the KCB level at 11,084 and then rebounded, and now it's trading higher. Of course, the KSI is green, show that the buying is there. So short seller for Nasdaq go slow. You're not worth it to do it right now. Okay, in fact, it should be going higher. The Dow Jones, I'll bring coming to you. Okay, the Dow Jones yesterday, you can see the Dow Jones really came down beautifully, touches the KCB level 29,765, and once it touches it right, brilliantly it rebounded. So now I understand why it's all right. This TWB system is so powerful. All these numbers are all self-calculated. Right? I didn't calculate for. It's not like I draw it myself. All these are calculated levels automatically updating on its own to let you know where the potential support and resistance. So it's pretty clear that yesterday 29,765 was a very strong support. So if you look at it right yesterday, you're just going to look at the chart. You can see very beautiful. The market was coming down all the way. And then once it touches here, the 29,756, it stopped there brilliantly. And then the boys came in to buy strongly this morning, and the market now is going up. Can you see that? Yeah. So you must always take a look if the system of mine, check the numbers on the right side, and then see any reason for going long and short. Okay, this is all very clear cut thing. So will the market be likely going up? Right, I still think that the Dow Jones will go up to 30,256 first. It will go there first, likely, unless something really dramatically happen in that side. But a bit tough though. Okay. S&P 500. Now S&P 500 is following through, and now it's already wait the day chart first. All right, the S&P 500 also show the same thing again. S&P 500, right, yesterday there's a very strong support at 36.54. I told you about 36.50 is a strong support, yeah? Okay, and the thing is this now, the 36.68, right? 36.68 is a strong BMB support level, as you can see. And you can see the market now is firming above it. Despite the KSI is red, but the market is firming above 36.68. So that's why I believe that the S&P may go back up to MLP level to test at 37.38 later today. All right, because if S&P go to this level, of course, that means that the Dow will go by 100 to 200 points from where we are. So traders, if you're in profit, I repeat my 10th time, consider to take some profit off the table first and then monitor again. If the market is still going to go down, it will break OP later. All right, you can still short when it goes below OP, yeah? Okay, Nicholas, KFC, is it today, moment, yeah? Yes, correct, Nicholas. You're absolutely right. Today, the KFC for today, yes, today Nasdaq is a KFC point. So from this KFC point itself, right, we can see that usually if it's going down, most likely it's going to go up. Yeah, this is how usually the KFC work. But of course, if the market continue to go down, it can still be there. So tomorrow or Monday, we were able to make the what you call more towards that. Very nice job. Okay, Karine, want me to take a look at this thing called maximumpain.com. Okay, all right. It actually shows the expiration, is it? Okay, go on. I'm going to bring it up for you guys. Okay, this is the gamma, the open interest, yeah? So this of the different strike, okay? So, okay, you can see a bit more put over call right now. Okay, these are all different prices. Okay, so most of them I'm looking at somewhere around here at 34.5 to 34.00. Okay, so can understand. Okay, so your question is scroll down to see some more. Oh, okay. Yeah, these are all the strike prices. Yeah. Is there anything that you want me to take a look? Any particular volume is it that is pretty high that you want me to take a look? Third one, heavily one-sided. Third one. Are you referring to this one here? Third chart. Okay. Okay. 1, 2, 3. Oh, okay. The maximum pain here as well. Okay. Fair enough. Okay. So the maximum pain now, everybody is more on this side. It's on the put side, about 33.4. Okay. These are the levels that they're looking at. Okay. This is all the call already coming. So there should be around here. That is where the main is, 3,800. Yeah. Okay. The one that's tighter is about 34.9. Okay. Understand. Thank you for sharing. All right. So Karine, maybe you can tell us more on how you feel on this chart itself. But it seems that the thing will end more towards here at 33.4. And there's still a long way to go. Yeah. A very long way to go. Okay. Let me continue this. For Karine and share. So yeah, very little call. Definitely very, very little call at the moment right now. Yeah. Very little call. That's for sure. Okay, continue. S&P done. Okay, that's a Hang Seng. Now, Hang Seng today is very interesting because of the Hong Kong China market. Now, today Hang Seng is a KSI rate uptick rate. Actually, it was comparison with the green, but doesn't matter. But the point is this: the market opens here. It's below P2, right? By right. But because the China market is so strong today, the market pushed all the way up, and it crossed the MA30 and the pivot 2 at the same time. So likelihood is going to go for MLP. All right, and that's 21,173 later. Now, if only when it goes back below pivot 2 at 20,951, then CCYR will be a sell back down to here, and that'll be 20,576. Okay, only if it goes below here. All right, if not, it's all right, don't do anything. Okay. All right. Karine, will big boys let retailer win big? Suddenly so much put option. Well, this is a bit of conspiracy theory, lah. Let's say a lot of people doing put, right? Usually the big boys will purposely push the price higher to basically let the put option expire worthless. So that's why now you can see a lot of retailer putting their put options, and likely the boys are going to push it through. But that was what people speculated last few days, but the market didn't really fulfill. In fact, the market kept on going down. So it's very difficult to see only just on the option side. Maybe they must see the underlying, the total exposure, everything, then we can play it better. But rather than going through and speculate all these things itself, right? To me, is that as long as the market stays above OP, then today just have to be a buyer now. As you can see now, right, S&P is trading above OP, right? So likelihood the market will be up for today for time being until late. Okay, can? All right, so Hang Seng is going to go for this 21,173 in my opinion. Yeah, you should be able to reach there rather easily. All right, you can see the Dow is moving up already, right? The Dow is moving up. So it's very clear that the market is trying to push up. Okay, DAX. No, DAX yesterday really went collapse. Okay, basically DAX, because of the interest rate factor itself, the DAX basically broke below MLP yesterday and then broke below the pivot 2. Straight away, it was a classic sell all the way down. And the KSI was red, it was uptick red. So it was a combination of all the sell pressure, and that brought the market down. Now, how low can the DAX go, right? Well, you look at the chart. Well, the next level for DAX can go as much as here, which is at 12,478. Okay, so will it go down there? Right? Well, it is possible because of the current situation, the interest rate factor. That is possible. But the US market, right, is now all the futures are still holding up. It may drive it up a little bit. Then after that, if things come in, maybe we'll see something more to this case. First, so initially up first, then after that, come down. That will be the, if you ask me, my expectation for this DAX. Okay, now this is the Nikkei. Nikkei has recovered. Now yesterday, Nikkei sold down very badly. You can see Nikkei all the way. It came down from this point here itself. It was at 28,000 back then. It went all the way down to 25,500. So that means that down about 3,500 points. But the more important thing is this, for today's Nikkei, it has opened right here above the pivot 1. So above pivot 1, above OP, CCRY will be a buy. And of course, true we thought the thing really open and go higher. Okay, so again, all these are the very important technical point. All these numbers are also important to fit on you and give you the best deal. Last but not least, right, you can see that the KSI also great color, all right, but the buying pushes up above the pivot one. So above pivot one, just have to buy. Okay, don't go against the pivot. Never go against the pivot. I've seen this so many times already. I can use the what do you call to find to use the juices, yeah. Now, crude oil, I tell you, is a very strong recovery on the crude oil yesterday. Of course, the 107.60 is the BMB external level, but I believe that crude oil will have a new BMB soon because, well, I say just look at 107 first, okay? Now, you can see that now it's hovering at 114. And if you can break the moving average at 114.80, then we have a chance for it to go higher. So the key point is this, the BMB SL has been a strong base around here. So as long as the market has strong base and it breaks here itself at 116 figure, the likelihood is going to test back 121 again. Right? So I'm not going to hold back to tell you this. I am watching crude oil. If once crude oil give me a good signal, then I look to buy. At the moment now, crude oil has been going down, very nice movement. So once it break out, right, it'll be a very good choice. Okay. Okay, last four charts, gold prices. Now, I already told you about gold price. Gold price by right fundamentally shouldn't be up, but it went up yesterday. So now the KSI is still red, right? And it's up, down tick red. So as long as it stays below OP today, gold price will be down. But because it's strongly supported by MA30 and the MLP, right? So now it's actually hovering around this area here. Okay, so if the market is strong enough or they can accept us, then we just go in. Okay, all right, the moment now gold is coming down, I believe that it may be, once it breaks below the MA30 and MLP, it should come down to 1833 because gold got no reason to be up for now. Judy Wong, Dow is moving now up, night down. Yes, indeed, it seems to be like that. Whenever the market is downtrend, usually the Asian market, the Dow will be up first, then the nighttime will be down. That's a downtrend market. Yeah, so that's the reason why I will still think that the overall market is still down, but we will watch carefully. But definitely today, the upside is pretty strong at the moment. Yeah, so maybe market has slowed down a little bit too much yesterday. Yeah. Okay. Silver price is also doing the same thing like gold. It's just hovering around. KSI is red, no blue bar, so a bit of mixed signal right here. But it's strongly now supported by the MA30 and MLP. So likely go down again. But if you go down to this pivot 2, couldn't stay down, then of course the upside is going to come in later, not now. Okay. Right, so we're done gold and silver. Let's look at currency first before we move to the cryptocurrency, a quick one, yeah. The dollar yen is trying to recover again, the dollar yen. Now, beautifully, the dollar yen break the support yesterday and came down marginally, missed the extension one time one, and now recover a bit. Because the KSI has been maintaining green all the way, so the boys are buying up, okay? Now, the thing is that if the market continue to trade higher, it will likely be only until here. Okay, 135 level. But again, not going to, say anything else because now at the moment, if you stay 135, it will break above the opening price buy. Yeah. Okay, the pound price went up yesterday because of the interest rate hike, the BOE hike, the interest rate. So that's why you can see the recovery of the dollar, a bit of the pound. But the KSI maintaining rate, so I don't think it will hold up too long. It might be coming down. And let me just check back to the chart side itself. Over here. Now do note, okay, the 10-year yield pulled back 2 days ago. All right, it pulled back 2 days ago. And I told you guys there will be a base about 320. So it's a base now at 3.2. So if it's moving up back again, okay, back to 3.4, the stock market will move down again. Okay, 3.4. That's a breakout over here. okay, versus all right, you can see the dollar itself is also came down, but then now it's pushing up again. So that adding some pressure onto the gold, crude oil, and stuff like that. Okay, so with this two thing, right, recovering both dollar and the thing and the 10-year yield, right, I cannot deny that, right, that will add some pressure on the commodities market. Okay, you add some pressure. Okay, last two before we go for today. Yes, indeed. Let's take a look right now. This is the Bitcoin. Now, Bitcoin is now still hovering below the 21,000 mark, and I still believe that Bitcoin is going to come down to 19,988. Okay, I'm waiting there. So let's see whether it goes down. Now, of course, the KSI has turned to green and blue bar has been extended. So again, same thing. If the market cannot go down, then of course it may go higher, right? So let's take note of that. Okay, so that is it for Bitcoin. I still think it will go down a bit more. Ethereum, same thing. If Bitcoin will go down, Ethereum most likely will go down. Target is 955 for this. I know that some of you may not like it, but I just give you my opinion. I believe that 955 will be something that we will want it. Okay, so watch out for that. Okay. All right, so that will be all for today. My view is this. I believe that the market tonight may see a bit of bounce up first initially. Only when the Dow Jones breaks below the opening price of today, then maybe we will see the selling resuming. But of course, if the selling resume, you can see that my pivot 2 is at 29,326. Our target is 29,563. So we are kind of nearby because we're using this 25% marker, right? Remember, okay, to do this particular expectation. So now we can see on the screen right now that our market is trying to recover. Maybe need one more days of thingy, then after it goes down. Of course, the further downside will be here and at 29,000. So that's why I said another few months, yeah. So this is where the crux is. So take note of that. Okay. Okay. So watch out for this one, 29,563. Okay. Now something to share with you guys. You take this figure now, 31,411 and 29,563, right? You take these two numbers, add together, then divide by 2. What number do you get? You take 31,411 plus 29,563. You get a sum of them, divide by 2. What number do you get? Can someone give me a number right now? Okay, Susan calculated 30,487, right? Okay. So now take a line here and I put it in. Okay, so this will be the very important resistance. You can see now, right? When the market broke below this point here, it went down all the way and it really touches the 30,487 marker and then rebounded, right? Then after that, right, the last few days keep on toying around this. But once yesterday it loses it itself, right, the market sold off. So if today the market will recover, this will be the level to watch, 30,487, okay? If the market cannot touch this point and then come down big OP, then very high chance 29,563 will be next. But if the market goes up back to here and then hover to come down again, also not a bad deal itself. You understand my point? So watch the OP and watch this number, 30,487. This will be the two likely number to watch out that might be critical to our Dow position and exploration on this. Okay, so watch out for that, 30,487. Okay, all right, that will be all for today. Thank you very much, guys. I really wish you all the best, and I will see you again live on Monday, MAO. This